thought we'd let you have a look at what Christopher Tan looks like. His appearance is too good to miss out on. He's one of our favorite wealth advisors. I first met him at the launch of his book, Money Wisdom, Simple Truths for Financial Wellness. And I must say, Chris, when I read your book, I picked it up, I heard you talk about it, I thought, I really need to meet Chris Tan, CEO of Providend, because what he has to say really resonates with me on a personal level. And I'm sure it's going to make a difference to the lives of many listeners. And so
Thank you,
here we
Michelle.
are, years later, Chris, talking, and I thank you for being open to this conversation where you share your lessons on investing and saving and insurance with us and our listeners. I really wanted to do this show, Chris, because as I mentioned, I was out shopping and having lunch, and next to me was a table of elderly women. And, it's sort of an occupational hazard, but I eavesdrop all the time. So I heard what they were talking about, and there were worries about MediShield, what it meant for them. And they were wondering if they bought an IP at their age, 65, would it make any sense, because they had developed all high cholesterol, they had developed high blood pressure, and they were worried that after years of paying these premiums, eventually they wouldn't be covered because of these exclusions. So that's
Right.
among the topics that we're going to be talking about. But Chris, let's start with a recap of the year 2021. What would you say are some of your biggest realizations when it comes to money? Let's narrow it down when it comes to investing in 2021, Chris.
Right. So good morning, Michelle, and thank you so much for having me. It's really my privilege and honor. Yeah, so some biggest realization, I think there are quite a few in the year 2021. I think the first one is do not focus on short-term volatility, rather focus on long-term returns. I know we've been hearing this again and again, but the last 2 years, especially during the pandemic, we really see this playing out. I mean, firstly, the financial markets has been, as we know, last year, March 2020, came down by 30%, but after that, before the end of last year, went up 16%, and then continued to grow year to date up till November, 13%. So if you've been gripped by fear last year and sold off all your positions, then you would have missed the returns. And the markets are behaving right now, wonky again. It goes up and down, every other day. I hope, we remember this lesson. I think the other thing that I want to talk about is avoid the FOMO of fear of missing out from cryptocurrency. There's been a lot of talk about cryptocurrency this year. I think something to ask ourselves this year as we look back is whether we can accept the volatility risk and the possible capital loss with cryptocurrency, right? This year again, I checked the Bitcoin, for example, chart this year, and it started at 30,000 at the beginning of 2021, and then it reached its peak at about 63,000 in April, a few months later, and then 3 months later, from the peak of 63,000, went back down to 30,000, and then 4 months later, it went to a new high, in July, 67,000. And now it's back to, I don't know, around about 50,000 again. Yeah. So I think when it comes to investing, if you're investing in equities, I think it's about looking at the long term. I mean, the short term is always volatile. And if you are like, wow, I don't want to miss out on cryptocurrency, you really got to ask yourself, can you take this kind of volatility as we've seen in 2021?
Okay, just play devil's advocate, Chris. I've been doing, radio for a very long time. In 2012, I sat across a man who wrote a book on cryptocurrency, and he told me to buy Bitcoin. And then Bitcoin was going at, $200.
Yeah.
So, who's to say how cryptocurrency is going to shape up and whether or not it is going to be the bedrock of a new financial system?
Right. Yeah, I think digital currency, or we call it in general, right, is definitely going to be in the future. I think we are seeing it right now. I mean, I don't know about you, Michelle. I hardly use cash. Even I go and buy my teh right this morning at the hawker center, and the auntie actually said, "Yeah, you can pay now me." So I don't even use coins and cash anymore. So I think it's definitely the future. But cryptocurrency, like all currency, is a store of value, right? And its value comes from acceptance. So the key really is whether you'll be accepted, when it will be accepted, which cryptocurrency is going to be accepted. Now, I'm not saying don't buy, but you got to think about these things and ask yourself whether you have time to wait for it to mature, because for some of us, I'm in my 50s, right? And I'm going to retire soon. And I definitely cannot put all my eggs into crypto because by the time I really need money, it may not be accepted yet, right?
It might go to zero as well.
Yeah. So yes, there's a potential, but you got to ask yourself some of these questions.
Okay, sound advice. We're talking to Chris Tan, CEO of Providend, one of our favorite commentators when it comes to personal finance, on his lessons for what he's learned about money and investing. Now, you started in the field of insurance, 20 years experience. What have you learned in 2021 that you feel we should all take note of when it comes to insurance, Chris?
Right. Yeah. So this year, I really learned, or rather remind myself, that we cannot depend on corporate medical plans. One day we will lose it. So recently, I actually met up with a retired C-suite executive of a MNC, and when he
Mm,
was still with his company, actually he was very well covered, for his medical expenses. But when he retired, he lost all that, and he wanted to buy a hospital plan for himself. But unfortunately, he's no longer insurable due to a recent cancer claim. And so, I mean, he's like scrambling around asking whether, I can help him find one. So it reminded me that, for many of us, especially if you're a senior exec, you have got a fantastic corporate plan, but don't rely on it. Buy one before, you lose your insurability. Now, the other thing is, in this year, I mean, the big news is, we know the IP riders, they got sort of like converted to partial rider. In the
mm,
past, Michelle, we can buy full rider, but now this year, I think it was April this year, the
mm.
government made it such a way that the insurers cannot offer full rider anymore. So many of us right now, if you go to the hospital, we need to pay at least about 5%, subject to a certain cap if we go to their panel of doctors. But if we don't go to the panel of doctors, then there might be no cap. Now, all that seems like I've got no choice. And automatically on our policy anniversary, many of us, listeners, you
Mm.
may automatically be converted to partial rider. And you think, okay, that's fine. But I'm just going to ask all of us to go and check with your advisors what kind of partial rider you have been converted to, because there are some differences. Because I really do not want the case whereby one day, if you're hospitalized, you are in for a root shock because the partial rider that you are in may not be the one that you expect. So just go and check. Don't just auto convert and do nothing about it.
Don't leave it to the auto conversion. Call your
Yes,
advisor, ask them what does my rider entitle me to when it comes to the claimable bit, right?
yes, that's
And
right.
the 5%. And what is the cap?
That's right. And you know what? If you want to choose a non-panel doctors,
Non-panel doctor.
non-panel doctors, yeah. And because even like one of the most common, or rather the insurer that a lot of Singaporeans use, NTUC Income, even their partial rider has got two kinds. So you may be automatically converted to a kind that you actually do not like, and you want to change to the other kind. Yeah.
Mm.
So my advice is, don't just leave it like that. Go speak to your advisor.
Find
Make
out
sure you
what your
get the
rider
one.
entitles you to, and if that is what you want, and what the
That's
other
right.
options are out there, right?
That's right.
I
That's
mean,
right.
even this idea of, before you go for a procedure, whether they will issue an LOG, is that, you can ask all these questions, right,
That's
Chris?
right. That's right. That's right. Yeah. I mean, nowadays, even if you sometimes, even if you go for a small procedure, like
Mm.
some uh, so-called doctors at the clinic, it could be a $5,000, $6,000 procedure. I mean, in the whole scheme of things, it's not a big medical expense, but
Mm.
some of them, they will ask for a letter of guarantee from your insurer. Yeah. So you may want to ask your insurer some of these things, how fast you can get your LOG and all that. Yeah. But point really is, you don't realize how important a hospitalization insurance is until you get hospitalized. But don't wait until then before you decide that, oh, shucks, I actually got the wrong one.
Right. Good point. I want to ask you about insurability. You mentioned this earlier, and this goes back to my talking to you about these elderly women worried about whether they were not insurable because they were older. They're mid
Mm,
60s, so not 75 over when you can qualify for an IP. And they were worried that if they signed up for an IP themselves, or if their child bought an IP for them, and they
mm,
had already developed high blood pressure, they'd already developed cholesterol, they thought, could there be a possibility where after years of paying for the premiums, they're not covered under the IP because the insurer
mm,
says, you know what, you have all these pre-existing conditions, so we're not going to cover it. So
yeah.
are you ever too old to buy an IP for yourself or for your
Mm,
parent, for
yeah.
example?
So, I mean, the first question I think we got to ask ourselves is, what is our healthcare expectation, right? I mean, the fortunate thing for all of us here in Singapore, if we are Singaporeans or PR, we all
Mm,
get MediShield Life, right? And that's regardless of our pre-existing illnesses. So we get covered, but MediShield Life is only suitable if you want to stay in a B2 and C ward. These are subsidized wards. But if you're not happy with that, you have a higher healthcare expectation, you want to go to B1, you want to go to a Mount E, Grand Eagles, and all that, then you really have to upgrade your IP. Now, what is the last age of entry for IP? That's age 75, right? And now, if you have gotten into an IP and subsequent to that, you develop illnesses, that's fine. We all know that because you bought the insurance before you had all these problems. Now, the problem comes if you are 65, 70, like car breaking down, spare parts starts to spoil, and then you want to buy that insurance, and then you have all these pre-existing illnesses. It is
Mm-hmm.
possible that they might be excluded. Now, it depends on the kind of illness that you have. Normally, if it's chronic, it will be excluded. But if it's an acute one, like for example, I've got appendicitis, I went for an operation. I mean, that's just one time. I mean, you don't have a second appendix, right? So that nothing to exclude, right? So you might be excluded for some of your pre-existing illnesses. And I know you're going to ask yourself, like, then is it worth it all? You
Because
know?
it's expensive, the premiums, they can go up.
Yeah,
When if
and
you join at 65, you're paying over a
yeah,
thousand.
and it doesn't cover this sort of this medical condition that I have. Is it worth it
Mm,
all? Well,
yeah.
I'll say that we have no choice. I mean, we can't do anything about that pre-existing illness already. The question we got to ask ourselves is, do we want to cover for things that has not happened but might happen, like cancer, right? And so if that is important for you, then I say, well, go and get an IP, despite the fact that there'll be some exclusion, but at least you cover for some things that might come out. That you thank God you haven't had got it yet. Yeah.
All right, got it, Chris. Thanks for answering that one. Christopher Tan, CEO of Providend. If you're listening to us live on Money FM 89.3, hey, it's our Christmas surprise for you. You can watch Chris live as well on Money FM's Facebook page. And there he is in all his glory after his workout. See what he looks like.
Oh my! Don't reveal to them. I just finished my workout, smelly and stinking.
Oh boy. All right. Let's talk about end of life planning. Now, most of us don't psychologically, we don't want to think about difficult things like end of life when we're critically ill, when we've lost our mental capacity. That's a difficulty of, I think, anybody also selling insurance. You understand that, right? We're not
Mm,
drawn to these topics. But was there
right.
anything, Chris, that happened in 2021 that made you think a lot more about this area of planning, end of life planning?
Yeah. So, well, I have a close relative who was suddenly diagnosed with stage 4 cancer just about 4 months ago.
I'm so sorry.
Unfortunately, yeah, after one session of chemotherapy, the side effects caused him to hallucinate, and then one night he fell and fractured his hip. And within a span of a few weeks, his condition deteriorated. Just a few weeks, I mean, and he could not feed himself. He cannot go to the toilet. He cannot move his bowels. He cannot move from chair to the bed and all that. He was basically bedridden, and well, not only he could not make decisions, he lost his quality of life.
Mm,
Basically, it was just miserable to see him. So the family actually brought him home from hospital to care for him, and
mm,
actually that caused a lot of mental stress, physical strain, and misunderstandings in the family. So while he has drawn up his will before he fell ill to give instructions on his estate plan, should he passed on, he actually did not make plans on how he would like to be cared for and how his properties should be managed.
mm,
And well, I'll just say that a lot of us, we think of writing a will, we think about, planning upon our demise, but this part on later life planning, or sometimes termed as end of life planning, is as important as legacy and estate planning, but often neglected. So I just want to strongly encourage every one of us here. I mean, things like ACP, advanced care planning, do it, because at least you can share your care preferences. Lasting power attorney, there's a legal document that sort of ensure that you can appoint someone called a donee to take care of your personal welfare and property matters in the event
mm,
you are mentally incapacitated. And even something called advanced medical directive, which is basically if you are terminally ill, you can tell the doctor, pull away all life support equipment. I don't want to waste money. I don't want to be in pain. Yeah. So Yeah, this is something I've seen, and it just sort of like tell me how important it is to do these things. One day we'll be there. This close relative, in fact, he passed away just 2 days ago,
I'm
and I'm
so
actually in the midst
sorry.
of the wake, and all that. But yeah, I really want to emphasize that ACP, LPA, AMD.
I'm so sorry for the loss of your relative, Chris. And thank you for sharing the decisions that we can all take and make to make end of life a little less difficult for the people around us. I always think end of life planning is your gift to the people around you.
Yeah, it's right. And also, what is key is besides taking care of the people whom we love, it's also about preserving family harmony.
Yes,
Right? It's
yes.
not easy to make those instructions if you have siblings and one says, but that's not what I think father wants. And the other person say, no, no, I want to preserve his life as long as he has a chance. Let the doctor do his thing. And then you see your father suffering, and then maybe you know your father a bit better and said, no, he just doesn't want to be the shell of a man like he is right now, right? But yeah, so the last thing you want is, well, when the man goes, the family harmony is gone.
Squabbles.
Yeah.
Absolutely. Yeah, I totally understand that from a very personal level as well. And perhaps we'll do a whole show on that one day. Okay, you mentioned legacy planning now. Is that different from end of life planning? Any reflections on legacy planning, Chris?
Yeah, so legacy planning, I would say, is the next stage after end of life. Legacy planning for a lot of people is about, how am I going to plan and how am I going to distribute my assets upon my demise. And so, again, over the last 12 months, I don't know why, maybe it's because of COVID, I've actually
Mm,
seen quite a number of clients whom they are interested in estate and legacy planning. Perhaps, COVID has caused them to think a bit more about their mortality, and these are clients actually with significant wealth and with assets spread over different jurisdictions, and they are concerned over incidents of taxes. And usually, when when they first came to us, they will always want to know the best legal structures to hold their assets, whether via a company structure under a trust or whether it should be onshore, offshore. And some will come telling us that they have been advised to buy insurance such as Universal Life. But I think, Michelle, that's
mhm,
really, really the wrong starting point. I mean, the starting point is really to decide things like, who you want to give, what you want to retain for your own use in your lifetime. When do you want to give it, now or upon your demise? And the values that you want to pass down in the giving of your assets before deciding the legal structure, and whether you really need funding instruments such as Universal Life. I think this is the correct way to do this. Don't worry about what structure to hold, what products to buy. Somehow people think that legacy planning equals writing a will, equals setting up a trust, equals buying an insurance policy. I mean, those are just tools. But really, I think the starting point is sitting down, asking ourselves, yeah, what does money mean to me? And when I want to pass that legacy, that financial legacy down, is there certain value that I hope that I can transfer as I
mm.
give this money? I think some more important things. The structure we can figure out. That's the easy part.
Right, right. Really interesting. Chris Tan is CEO of Providend, sharing with us his insights from what he's observed in 2021, things we can do to take better control of our money. In case you missed it earlier on, Chris shared some realizations to do with investing that he's picked up in 2021, things that he's learned in the area of insurance. We talked about whether it's ever too late to buy an IP if you're older. Chris, we're going into December 17th today. What are some things you want to remind listeners to do before the year ends?
Yeah, I mean, we're just left with slightly more than what, 1 week, nearing 2 weeks. So if you have not, we always say this, if you have not, opened up your SRS account, please go and do it. The statutory retirement age is going to change next July to 63, right?
Okay.
So, well, book your place with SRS, even if you don't believe it, you're not sure whether you want to do it. Go and open up an account. It's very easy. It's done on internet. Put $1 into the SRS account, and
What?
then you
You have to do it yourself? It's not done automatically?
yeah, it's definitely not done automatically. So you got to do it yourself, right? So you go to any of the three local banks, UOB, OCBC, DBS, and then go online, open it up. You got to put
Open
$1,
one
just one
dollar.
dollar.
Okay.
Yeah, and then you chop already. You chop the place, right? So chop meaning to say that you chop the age 62 statutory retirement age. Now, if you decide to fund your SRS account subsequently, well, now your permissible drawdown age before you get any penalty is age 62. Now, if you wait like another 6 more months after July next year, that penalty-free withdrawal age will go up to 63. So, well, $1 we can spare, right? So just go and
So
chop your place.
$1 will mean that you can withdraw it 1 year earlier, basically.
Yeah, $1, and it means that if you subsequently decide to fund your SRS account, you can
Yes.
withdraw at age 62 without penalty.
Without
Yeah,
penalty, as opposed to having to
without
wait till
penalty.
63.
That's right. That's right. Because we all know that SRS, if you withdraw before the statutory retirement age, firstly, whatever you withdraw, you pay a penalty of 5% of what you withdraw.
Ooh.
That's quite huge. And then the amount that you withdraw will be added on to your that year's income and tax accordingly. Right? Now, so if you sort of like don't open an account now, you decide to open it end of next year, then that penalty free withdraw 5%, you can only do it after age 63, no longer after age 62.
Okay, quick, go and book your place.
Yeah,
As
so
Chris
simple.
said.
$1, right?
Don't draw down anything, right? It's just $1.
Yeah, just $1. And it's a 5 minutes job, right? Go online, open an account, put $1, and you are set. And then if you don't like SRS, then don't do it. You just $1 in the account.
So it gives
No
you
big
the
deal.
option of
Yes, it's an
funding
option.
your
Yeah,
SRS, which again, we love our acronyms in Singapore. Remind us what SRS means.
it's super retirement scheme. I'm just kidding. It's supplementary retirement scheme. Supplementary retirement scheme. Yeah.
Okay,
So it's
great. And I can
paid
do
at
it any
$1.
bank. Any bank, or do I have
Uh,
to go to
no,
CPF?
the three local banks.
3 local banks to do it.
Yeah, the
Okay.
three local
Got
banks.
it.
OCBC,
Chris,
UOB,
what
DBS.
great Christmas present that is for us at the end of the year. Any final advice as we try to face 2022 with a bit more optimism?
Well, I'm not sure optimism, but more introspective, more reflective. This pandemic has definitely taught many of us that life is uncertain, and we can die anytime. My father passed away last year, suddenly during the circuit breaker, and even
So
as I
sorry.
speak now, like I say, my relative has just passed away 2 days ago. So, there's a saying in the Bible that says, "What does it profit a man if he gains the whole world but loses his soul?" And I'm sure there's a similar thing in other faiths, and in the spiritual sense, soul can mean different things for different faith. But even if you are not religious, in the secular sense, soul is the spirit and essence of a person. It is the part of you that makes you who you are and that will live on after your death. So, I mean, if I rephrase this verse, right, I mean, what does it profit a man if he gains the whole world but loses himself? So, even as we make wealth decisions, at the end of the year, as we are reflective, as we make wealth decisions, I hope that, your wealth decisions, let it be subordinated to your life decisions. Let not the wealth decisions define who we are, but rather enable who we want to be. So that one day when we are gone, we can say that we have lived a purposeful life with the wealth that we have gained, and we leave behind a lasting positive legacy. And I think, Michelle, that is the true essence of legacy planning. So as the year comes to a close, I just thought I'll leave you something to think about, because usually at the end of the year, people like to think about resolutions, and
Oh,
things like
yeah.
that.
Oh, yeah,
Yeah,
we,
but on a
we start that in
positive note,
January. Yeah.
next year is definitely going to be a better year. I mean, we have gone through 2 years of COVID already. It's about time that virus go away.
Wonderful, Chris. Thank you very much for your reflections on 2021.
Michelle.
I sometimes lose track of time, honestly. And we're coming up close to the news. Chris, I'll let you go get your bath after your workout. Thanks so much for doing this
Thank
for
you,
us
thank you,
on
thank you,
short
Michelle.
notice. Christopher Tan, CEO of Providend, sharing his reflections on personal finance for 2021.
Money FM